You're watching Famous Dave on YouTube.
Hi again from Cape Cod. My name is David Lincoln, and you're watching the Short Vol Show live as I adjust my filter here for a second. Let's see if we can make that green screen look a little bit better. Let's see, that's a little bit better. All right, so welcome back. I'm a little bit translucent today, and you know, after a lot of effort, my hair is actually able to go back in a ponytail, and I don't have hair all over the place. I do have long hair though if I take it apart. Anyway, so since January, I've had a short position in. Oh, actually, maybe I'm a little too translucent here. Let's see if we can fix this again. Since January, I've had a position in GameStop where I've been short deltas, I've been short the stock, and just as recently as last week, I switched from just being straight up short to having a position of where I have a condor on. And what that is as I continue to try to fix my the screen so it looks a little bit better here. All right, we'll go with the ghost look. Last week I switched my position from being just straight up short to having a condor on. What a condor is that I've selected a certain range that I'm looking for the stock to stay in. And fortunately, I've gotten pretty lucky in that the stock stopped going down right when I switched to not being short anymore. So that was fortuitous. I'm not going to say it's a skill thing because most of trading is you know, you need luck on your side for things to work out. Let's just put it that way. So if we look at the chart here, you can see GameStop low of 145 last week, but since then, and this is the day I kind of switched stuff around, we've gone up. Now the area that I have selected as sort of the bullseye of where I would make the most money if GameStop stayed in that area was between 70, the price of 170 and the price of 100. So if we look down at the bottom of the screen here, I'm long the 180 put, I'm short the 170 put, I'm short the 100 put, and I'm long the 90 put. So I have a condor on 22 times. So that's a pretty wide range between 170 and 100. However, we're pretty close to you know, hitting the upper part of this range right now. So basically, when I selected that range, I was making the educated guess that we would continue to move lower, and we'll see if that happens. We've had 2-3 up days in a row now. We don't know if that will continue. Now, what's driving the market at this moment could quite possibly be the earnings that came out in AMC yesterday, and let's talk about that for a bit. I find it kind of hilarious that just reading all the comments once again in on StockTwits from people regarding AMC, and you know, when a CEO comes out and on an earnings call, it's all very standard. They always try to say positive stuff about the company's doing great. They basically just say positive stuff and try not to make any news, right? But a lot of the people you can tell that were participating in the conference call or watching are new to all this, and they eat it up like it's the guy's actually really saying something. Whereas these guys all say the same thing always. Oh, we're doing great, everything's wonderful. You know, it's of course they want to give a positive spin to their company, but the people who are watching this, who are obviously small investors, just eat this up. And, according to them, AMC today was going to open at $80. And they were shocked that this hadn't gone higher. If we look at the price action after the close yesterday in AMC, certainly it popped on the earnings news, but it wasn't like this huge, 200% spike or something like that. No, it was up. closed 33.80, and it got up to 38, but then it pulled back. Let's see. No, I'm sorry. It got up to 37 yesterday after the close, and then pulled back. But then the market closes from 8 at night until 4 in the morning. Most people who are watching this already know that, but in case you didn't know that, the market closed from 8 at night till 4 in the morning. So when you look at a chart here, there's a little gap here between in time that doesn't really kind of it's not inherent right away, but right where I'm pointing here, there's a gap in time of several hours when the market was closed, and you can see that when people woke up in the morning, they bid things up a little bit more. Now, it's important to check out the volume when you're looking at these charts to give you some perspective. There's been 4 million shares traded in AMC, which is, a decent amount of shares. And certainly the earnings were beat. They were expecting, I think, a loss of 90-something cents, and they got a loss of 71 cents, which is better than expected. Now, as I've said many times before, I'll say again here, a stock can go up, down, or do nothing based on any sort of earnings. So you could have better than expected news, and the stock could go down. You could have better than expected news, the stock could go up. You could have better than expected news, the stock could go sideways. There's no way to predict what a stock is going to do. Even if you had the earnings ahead of time, it's very hard to predict what a stock is going to do on earnings. So, and that should be news to some new people, because I think people get caught up in this little loop of just watching other people who are long a stock and, have high hopes for it. I mean, just reading the comments in StockTwits is just not a reality. All these people just very enthusiastic, taking any sort of news story to be very positive, and no matter what is said or done, the reaction is always the same. Oh, that's great. The hedgies are screwed. The bears are in trouble. This thing's going to the moon. And there's only so many ways you can say that in so many different contexts over and over again every day before it kind of becomes meaningless. And hopefully, as people start to gain some experience as traders, this just constant pumping rhetoric will disperse just a little bit. I mean, I was just out of curiosity looking at StockTwits after the close yesterday once earnings came out in AMD, and it's all just the same exact stuff. This is going to the moon. It's like earnings could have been very negative, earnings could have been positive, earnings could have been anything, but it's always just the same rhetoric. This is awesome. This is going to $1 million, and, the bears are screwed. So let's try to bring some reality into the situation here. The reality is stock is up $5 right now, which is a pretty positive thing. We'll see if it continues to rally from here. Obviously, despite all of the optimism, we still have a negative number, right? This company's still losing money. Yes, it's doing better. Yes, they've announced that they'll accept, I guess, Bitcoin to pay for movies and stuff. And yes, they've got some great plans. It certainly has helped AMC that their stock price has moved up. It's allowed them to get out of debt. It's allowed them to raise money. But raising money only gets you so far. You need to be profitable as a company to continue to exist over time, right? You can raise a lot of money, but you're just going to burn through it if you're not profitable as a company. So the enthusiasm and the great interest in AMC has been helpful to the company. It's revitalized this company, and it appears that earnings were pretty good, better than expected. But the stock price is way up from where it was before, right? We're in a spot here with this stock, which is very similar to GME, where the stock price is way, way, way higher than it was at this point last year. And thus, the question is always, does that high price that we're already at, is that justified, right? Saying that, well, it's definitely going way higher than here. Well, there needs to be a certain amount of positive news just to keep the price where it is, because we're already at a very elevated level. And I think that's the point that's being missed by a lot of people that are trading this, that we are already at a very elevated level. And so it's not a given that this is going to move higher from here. And I don't know why that is such a inflammatory statement to make, but it seems to be. This huge spike that we had up to 72 is a very extreme thing, and thus we've come down off of that, but it's not clear which direction we're going to go from here at all. And sometimes I feel like I'm the one voice that's saying that among a sea of people saying this is definitely going higher. Nothing is definite. All right, so let's move on to Hood. So I did actually have some different equity positions on, which is kind of rare for me last week. I jumped into Hood here, Robinhood. If we look at this chart here, and I get out of the way for a second, almost doubled. And there's this woman, Kathy Wood, who has who famously bought $45 million worth of Hood shares on the initial public offering. Now, this is showing these are all the trading sessions that we've had so far in Hood, and you can see the first day stock closed 33.25 after the initial public offering being 38. So it was down on the first day, but quickly recovered and actually more than doubled in price, got up to 85. I don't really like this chart. Let's see if we can get a better view here. That's a little bit better there. Got up to 85. And then on this day right here, this Thursday, I decided I would put a position on. And my logic here was that this probably would not go lower than the initial public offering. Yes, we had this big up move, and we're probably going to pull back from there, but it would probably find some sort of support level around where the initial offering was, which was 38. So what I did was I sold the 45-40 put spread, thinking that 40 was a level that this would probably bounce back up off of. And to the upside, I sold the 70-75 call spread. So kind of a similar position as before, where I picked an area in the middle where I thought this would stay, that being between $45 and $75. And the first day I kind of got burned. When I put this position on, stock was 60, and it went straight down $10 to 50. And so I lost a little bit of money, but then in the subsequent days, it came back from that 50 back up to 55, and my position was profitable. I took it off 2 days ago. All right, so then let's move over to AMD. And this was also was in the news a lot last week, having this big move up, and I sort of faded the move. So I said to myself, wow, it's had such a big move up, it's probably going to come back down a little bit off of that move. And so I did sell the 120, 125 call spread, and indeed we did go lower, and I covered that position later in the week. These all just being kind of small trades, with the main one being GME. And so GME today indicated up a little bit higher, which is not good. This was not a good move for me here from around, what was it, 150 up to 164 yesterday. That wasn't a great move for me. However, the P&L has kind of stayed okay, and part of the reason for that is that this position I have on does collect decay every day. If we look at the Greeks here, you can see, well, right now it's only showing, let's see if these numbers are correct. What it was showing yesterday was I was collecting about $50 a day in decay, and so we had the 2-day weekend, so that's $100 there, and all of that helps a little bit to cushion the blow. If we look at the Greeks, and I need to recalibrate things here. So what I'm going to do, just to walk you through recalibrating, there's different sets of Greeks. There's one under the trade tab, and then there's one under the analyze tab. And so I want to reconfigure my columns under the trade tab here. So I'm just going to go under here, and I'm just going to add a section for delta. And sometimes it's weird. You'll come in the morning and this is reset after you set it all up sometimes. So we're going to select delta and move that over here. Then I'm going to I'm going to do let's see, theta. So if you're new to this stuff, the Greeks are ways of kind of analyzing your risk with a position. Delta is going to tell you, there's 3 definitions for delta, but the main one would be how much you make or lose for a 1-point move in the underlying. So if you have a delta of 100, if your stock goes up $1, you make $100. If the stock goes down $1, you lose $100. Delta can also tell you the hedge ratio for options. So if you have a 50 delta option, then that option is acting like 50 shares of stock at the moment. Theta is your time decay, how much you either have to pay or collect per day to carry that position. Gamma is the change in sort of curvature of your delta. So if you have a gamma of 10, then if your delta starts at 100, up 1 point, your delta will move to 90. Up 2 points, it moves to 80. So gamma is going to tell, essentially, if you sell options, you're going to be short gamma, you collect theta, and your delta is going to move in the opposite direction of your stock. So if you're short options, you don't want the stock to move around. So as long as the stock stays still, you collect money every day, and your delta stays the same. If the stock does move around, then the delta is going to start to move against you. Opposite being long options, you're going to have to pay a little bit each day to have that position, but if the stock moves around a lot, you will make money. Generally speaking, I prefer to be short options and collect money every day. In options trading, it's generally believed that there is a slight edge to being short options, and the reason for that is that just all things being equal, less people are either able or willing to sell options than are willing or able to buy options. Thus, the pricing is just slightly higher than it should be as far as how much options cost, just because there's a less of a supply of sellers than there is of buyers, in a sense. Now, if you've got an index which is very efficient, like the SPX, this phenomenon is going to be negligible, but in less liquid stocks, it's going to be more pronounced. As a market maker on the floor, with the ability to buy in the bid and sell in the offer, and also having a lot of orders coming through, I felt more comfortable actually owning options than I do as a retail trader now, and having to finance stuff just based on my own activities. So we're coming in today. What I'm thinking about is just what GameStop will do during the day. Now, I want to protect my funds and my position. So if we continue to move higher, I will take some sort of action, because I don't want to just let my money just flow out the door. I mean, right now, if we look at the delta, I'm short about 50 delta. So that means each bucket goes up, I lose $50, which doesn't sound like too much, but if you have a 10-point move, then all of a sudden that's $500. And remember, in the end, as long as GameStop is below 170 when the options expire, then the position will be at maximum profitability. And when we look at the position, I have 22 of these trades on, which means that maximum profitability, the position could be worth $22,000 on expiration. We have 38 days till expiration, so just a little bit over a month. But I would prefer that this moves away from that 170 number and moves lower. I would prefer it go to like 145 right now, but it's moved higher a couple days in a row. We'll see if that trend continues once again. So far, there's only been 37,000 shares traded in GME, and we're looking, it closed 161, right now trading 164, so up about 3 points on 37,000 shares. Now, the open will tell us a little bit more, because 37,000 shares is not very much, so it doesn't really represent, so things could easily change one way or the other. but this has been moving around on pretty thinly traded shares, so I want to really keep an eye on it today. And I feel that GME is rallying in sympathy with AMC. Many people who are trading AMC also are trading GME, and so they kind of move together a lot, and I feel like that's what's happening right now. Now, AMC really hasn't made that big of a move up on earnings, and so I could certainly see this going negative today. Now, I don't have an opinion either way, and I don't have a position either way. And unlike the vast majority of people who are long AMC and who really believe it's going way to the moon and everything, I think that if people were to listen to this video, they would think that I'm a bear and I think AMC is going down. I'm rooting for it to go down and all this other stuff. No, I'm neutral. I don't have a position. I don't have an opinion. It'll be interesting to see what happens. GME, my opinion is basically that the stock is kind of in a holding pattern right now. I do believe it will drift lower, but I don't know when. And besides that, the VIX right now, 16 and change, kind of in the lower range of what we've seen it lately. If we quickly pull up a VIX chart, we can see that it has moved a little bit lower as of late. I think that the coronavirus is still very much in the news, but the recent cases. Remember now, when there's a lot of cases, it doesn't mean a whole lot of people are dying, but a lot of the publicized cases in the so-called red states have prompted people to go out and get vaccinated, which is a great thing. We saw vaccination rates really explode in places like Alabama and whatnot, and it's great that we have that tool out there to protect people. And so I think that will continue to happen, and the coronavirus will continue to fade from importance here in sort of the marketplace moving forward. So that's kind of where we are. Let's take a look at top headlines before I let you go today. And I'm just going to pull up Drudge Report for that. Okay, so still coronavirus in Texas in the news. It's like Darwinism, that people have a chance to get out of this coronavirus thing and they're just choosing not to, which doesn't make sense. Florida requests ventilators, blah, blah, blah. This is now, once Drudge Report is a conservative news outlet. Let's see what we've got. Judge denies Britney request to cut dad. So nothing's in the news. All right, so that's kind of where we are. Thanks for checking out the show today. I will keep you updated on what's going on with the positions. And my advice just to traders out there is to, bring reality back into the situation. Listening to an earnings call, everybody should do that once in their life, but it's not going to be that interesting once you've listened to 100 of them. And I've done things before, like call the investor relations for a company the day before earnings and hope I got some secretary on the phone that didn't know what was going on, who would tell me earnings ahead of time. I've called them up and said, hey, can you give me earnings now? Just on the rare chance that somebody slipped up and gave me earnings before time. But when they come out and discuss earnings, the CEO, of course, he's going to say positive things about his company, and I wouldn't read so much into that. People were coming online yesterday and saying, they say great things about this company. It's definitely going higher. Of course, they're saying great things about the company. That's what their job is, A. And B, companies are going to come out with these proxy things for shareholders to vote all the time. And you, as a shareholder with basically 0 shares, voting for some other thing, although it kind of feels important and exciting, it's basically a waste of your time, because you have a very little effect on things with your 20 shares or 100 shares, or even if you have 1,000 shares or 100 10,000 shares, it's still not going to affect things much. I know it feels important to mail in a proxy for something, and if you want to do it, that's great, but the huge excitement of people online saying, "Oh my gosh, AMD or GME reached out to me and wants me to vote on something," as if this has some sort of meaning for the stock moving one direction or another, is ridiculous. So, people, educate yourselves. Stop coming across as such rookies. AMD, AMC, and GME are not the first stocks in the world. I know it kind of seems like that to people, but they're not the first stocks out there in the world. Educate yourself. Stop making ridiculous comments online, and look at the stock price. When you see the stock's up $3 after earnings, it doesn't matter what the CEO said. The stock's up $3. That's what matters, right? If the stock doubled on after earnings, then yeah, something significant is afoot, and you have reason for great enthusiasm. If the stock's up $3, if it's a $30 stock, it's up $3, then earnings is basically a non-event, right? It doesn't matter what the CEO says about how great everything is. It's basically a non-event. And you should recognize that, because you sound foolish when you come online and say, like, this thing's going to the moon, 85 tomorrow, when it's trading up $2 on earnings, right? It's trading up $2, dude. Chill out.